Though I think it'll be fun. Hi. Welcome to Wake Up and Deliver. While we're still waiting on Matt to wake up and deliver his water to his desk. He actually very poorly timed this. He's like, I'm going to time it, so I'll be right back at the start. But StreamYard's got about a 30-second countdown. Oh, are we live? Are we live? He's sitting in the corner.
Hey, are we live? I had to get a glass of water. I thought it'd be quicker than 30 seconds.
Yeah, no, you're not. I said we're still waiting for you to wake up and deliver your water. So there you go.
Oh,
Logistics execution live for everyone this morning.
That hurts, John. That hurts. Well, welcome everybody to another Wake Up and Deliver, episode 31, season 2. That's right. You know, I can tell by comments who the person is. Hydration station to Cat. Yes, we need our water. It doesn't show the person's name on my end, but
hydration station. But she was laughing at you first. Like, just we'll put that out there for everyone to make sure that's clear.
It's quite clear. Everybody knows.
Yeah,
we all know. Good morning, everybody. Thank you for joining us. As always, we're gonna have a fun day. Middle of summer. John's on location in a church. He's praying.
It's not a church. I'm at a cottage. I was so inspired by Kat's recent success that I was like, no, I'm going cottaging too.
John joining us on location at a cottage. Where? In the Muskokas? Which one? Kawarthas?
No, I'm near Halliburton actually. So
okay, well, he's in a nice cottage. I am, as usual, in my dungeon of an office. We're gonna start off with some. We got some funny comments this morning. John's getting called out. We're going to start off with some brain food like we always do for John's reaction. And are we ready? And here we go. Progress only comes from changing how you see the world.
Yeah, this is a good one today. I give you 2 thumbs up on this one. Actually, you know what's funny? As an opposite to this, so like Matt knows, but you guys probably don't know because I hide some of this nonsense. I have a lot of bags. Like at one point I was really into backpacks when I was traveling a lot and stuff, and one of my bags actually has a patch on it that's kind of like the same kind of mentality. It's a different frame though, and it says, you know, if you go into the world essentially like looking for something, you're going to find it. So to me, it's always something that brings back, like if you're going to go in and look about challenges and problems and feeling like you can't get by it, like that's what you're going to see, right? So I think it goes hand in hand with this, that if you're going to change something, if you're going to do something differently, how you perceive it is always the most important step.
How do you know people are in logistics? They have multiple bags. They collect bags because it's a way to store things. We like organizing and storing things.
Well, like, and you know what the worst was too, Matt? Like, he looked at one of my bags one time. He's like, "Oh, that's kind of nice. I like it." And then he's like, "How much?" I tell him the price. He's like, "Oh my God, no." I'm like, "Well, Matt, you gotta pay for quality if you want the innovation."
I'm Temu style bagging.
Yeah, I don't do that.
Yeah, kind of cheap and ready to go. Multiple of them, you know, just grab and go. No, all jokes aside, you know, I enjoy a good bag once in a while as well to have your items all. And you know those bag things that you put inside the bag to organize them? Those are solid.
Yeah, some of them are quite good actually. I mean, maybe one day I'll do it, but like because I'm traveling, you should see I've got all the pouches. I've got my stuff all like organized in separate like things.
It's like mini skids that you put inside your bag and you organize your skids.
Yeah, it's like, oh, what am I going to do here? Going to see this client? Take it out. Funny enough, though. So this, you know, the other thing is too, you know, like, and then we'll get into the real real
The
content of the show.
nitty-gritty.
But the thing is that, you know, with Matt and I doing this especially so much, and like we've moved around, we've done the podcast, you know, from the back of cars, cottages, like, you know, different countries, whatever. Tell you, it really lowers your threshold on your Zoom or online meetings, because when people are like, I'm in their office, I can't get it working. It's like, I was in the back of a bus last week.
It's true, eh? We make it work anywhere, and not everyone it gets the challenge of it. But when we make it work, we make it work. So now every time I go on a meeting, it's the same thing. I'm like, how do you not know? Like it's just so easy.
Yeah.
But it's funny how quickly society changed. Like during COVID, everybody was like on point for virtual meetings. Now it's like, which one am I using? Oh, the Hangouts always causes this. Oh, Zoom causes that, and I don't think I have too many people on the Skype one, whatever that Microsoft one is. What's the
Teams.
Let's move on. Teams. We'll move on. John, what's the topic of the day? What were we focused on today?
I think there's a couple of different things. I wanted to get your take. I'll share a little bit about, like, so I want to talk about demand forecasting, because I've been doing a ton of demand forecasting stuff lately. So share some information that way, especially with people, like, you know, all the nonsense with like the tariffs and like costs and all of these things. The other thing I'd like to talk about, and I wrote about it weeks ago in my newsletter, but it's like this thing that is like continually coming up, and I think we should talk about COGS a little bit when it comes to, you know, people importing product and all of these things, because if there's one thing I see wildly misapplied and that has been victimized by all kinds of internet models, I'll put it that way to put it really nicely, is COGS. It's really sad.
So explain COGS to everybody, just in case they don't know what COGS are.
Well, so COGS, like, it's your cost of goods sold, right? So when you have a product, usually a product, I mean, it can be service, but typically this is like, you know, products and stuff like that. I have my products, I'm selling them, and it's basically like when you're looking at your income statement for your business, you could say, I have like this revenue, it cost me like this much to sell the goods, and kind of starts drawing your initial like profitability and stuff like that. And then you get into your operating expenses and whatever. But the amount of things people are throwing into COGS because of these internet systems is wild, like wild. You know, I had a conversation last week with someone, and I was like, hey, I see that you guys are building out this section. Like I was helping them work on this other thing, and I'm like, I see that you're working on this section from your files and stuff like that. So I looked at it just to, you know, to share any feedback. And I'm like, you've got stuff that you're listing as COGS that's not allowed to be COGS. And I think a lot of this has been popularized by some of these ideas from e-commerce brands and whatever, that try to help these founders better manage like the situation and understand like how they're performing.
So what was categorized in the COGS, just so we have a better, greater context, just so people know if they're one.
I'm gonna get there, but that's why I'm getting there.
Sorry, John.
So he's like, sorry. So my point with this is that, like, a lot of these popular internet systems have kind of exploded out COGS to this more of this broad concept of like total cost of delivery is probably the easiest way to think about it. So it's kind of like everything that you've put into your product to get it to a customer's like actual like hand. Okay. Which sounds like it should make sense, but realistically, like a very traditional finance accounting is your cost of goods sold is up until the point your product is ready to be sold, i.e., so like, yeah, like in a warehouse or whatever. And then there's also like things that are super popular today that don't really count. Like, ooh, I love to put, you know, super pretty packaging. I love to put my inserts. I love to put this and that. And there's some real like, you know, differences. It's like, of course, some packaging is considered part of your COGS, but like, you know, some of these decorative or seasonal or changing or like these things that aren't really required to sell the product are not. They can most certainly become engulfed in this concept of cost of delivery for sure, because hey, if I'm putting, you know, another 10-cent card here, I'm putting a 25-cent piece there. Like I totally understand why people are capturing all of these things, but they're throwing them under COGS. And the reason why I think it's really important for people to have these lined up is that when you start getting more mature as your business and you want to go for bigger business loans, maybe you want to get better lines of credit from your bank or whoever it might be, whether you want to start selling your business maybe at some point or whatever it is, you are going to be in a better position to do all of those things if you follow like sort of like GAAP, like standard accounting practices, and do things properly, because that's kind of what that level of expectation is when they're looking at it. And the worst thing I think you can do as a small brand is have a really unique or creative kind of accounting, because I think it immediately brings in then the credibility, the quality, and the authenticity of what you're doing. And it really detracts people who might be able to give you the money to help you grow, because they're like, well, this person doesn't know what they're doing because you're not allowed to do this. And if I found this mistake right away, how many other mistakes am I going to find?
You start digging deeper. Yeah. No, we just had a recent conversation with our accountant, and they were saying don't try to be creative in the short term. Or keep your books very explicitly defined, categorize everything correctly. Don't try to second guess if something is this or that. Get your bookkeeper to make sure everything is categorized or subcategorized to the minutia, because then the accountant can decide whether they did it correctly or not. Rather have more information than less information. Because once, like you said, once they kind of see one mistake, they're going to start digging, and then it kind of can create a far bigger issue. A lot easier in the early stages of your startup to have all that kind of laid out, because you're just putting in those GL codes into your system. You're just putting all that information in. It's a lot easier to fix than you're down 5 years down the road and you get audited by the government. The government goes, this to John's point, this shouldn't be in the COGS section. And then everything gets all turned up because they start digging further in what you're trying to quote unquote hide, even though you're not trying to hide it. You're just trying to be, creative, that you thought you were being creative. It's just not a best practice because that is not your expertise. You were told by someone on LinkedIn that they thought they knew what they were talking about. Talk to your accountant.
The guru sales guy. And look, don't get me wrong. I actually think that there's a lot of benefit to some of these systems and ways of looking at your business. But then, there's definitely other ways that you can go about doing both. You know what I mean? And the other thing is that, just to your point, is that there's a lot of people that might be like, oh, well, GAAP, you can actually do these things if you specify them. And that's also very true. But the likelihood that your business right out of the gate or in those first couple of years is at that financial clarity, stability, visibility, transparency, whatever you want to think about it, right away, that you think you can create a custom accounting kind of system right out of the gate, I think is, honestly, to your point, it's like a waste of time. And there's a higher likelihood that you're going to get it wrong than you're going to get it right. So stick to the basics, do things properly. And then, to Matt's point, what he said there was actually gold. When you're talking about your back end accounts, like your GL accounts, right? Like these types of things, that's where you can actually get really creative with doing both. So I can most certainly create like a very typical accounting structure or whatever that's going to be very GAAP compliant for things like my COGS and track everything properly. But if I create like enough accounts, sub accounts in these different major buckets, which would be like your revenue, your cost of goods, your accounting, your operational expenses, your sales expenses, blah, 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 whatever, I can recreate any of your internet systems after the fact, because what I would just do would be run a report from my accounting system for essentially, all of the balances from these accounts, from all of my coded accounts. And then I can recreate something after the fact that says, okay, I want to follow Bobby Joe's like e-commerce king platform, and he suggests that I have these costs all lumped together as my cost of delivery. Cool. You can do that. You can do that, but you don't want to mess with the foundational accounting part of it to do that.
Before we segue into your demand forecasting conversation, the other thing that I guess you and I kind of talked about recently too, is the evolution of the content on LinkedIn. And I've been seeing a lot of this to what you're talking about right now, where everybody says it's the death of Excel, it's the death of this, it's the death of that, this is the best new product, this is what you should do, AI this, AI that, and everything seems to be evolving and changing. Not every product out there that you see being broadcast to you is the right product and might not be the most best thing for you. I'll give you a great example from a personal experience. with our TMS, we were, I was struggling. Actually, you and I talked about struggling some back end things. I was trying to figure out how to automate it. It wasn't working out. And I was actually starting to contemplate on getting some third party enhancements to get in there. And I'm going through this whole exercise of trying to figure out how to make this pain points for myself reduce. And automatically I'm thinking, I'm looking on LinkedIn, I'm looking on Google, all these extra things I need to add on. And then I kind of did the smart thing, or I should say, it dawned on me. I reached back out to my software provider. I said, hey, does the system do X, Y, Z out of the box? Said, yeah, yes, it does. I'm like, oh, I didn't know. I'm like, I guess it wasn't part of my training. They're like, not everything gets lumped into the training because you might not have those pain points at the very beginning. You should regularly either read the notes that we put out on the software or regularly reach out to us, be like, hey, I'm having this issue. Is there a solution? And most people, like me, myself included, just assume that I didn't learn it, so therefore it doesn't exist. First place you should reach out is to the software that you're connected with and ask, hey, does this solve this problem? And is it out of the box available? And right away they said to me, yeah, here it is. Here's additional training that we can provide for you. We'll make it work. And that pain point's gone. And I think a lot of people have the same experience I do when it comes to their software, because every company I've been at so far, right away, it's that I've learned everything I need to learn from the software. There's nothing else there. So I should know. But majority of the time you don't know. And there's additional things that are there.
Imagine when I was at Agripeer in the food business, right? They had a home.
The first time he named the company on air, by the way, everybody.
Oh, I guess because it's not a bad comment, and you can go look it up. So it's kind of public knowledge. Anyways, point being is that they had a homegrown ERP at the time, or at one point when I was there, and everyone was like, "Oh, it's so bad. It's so archaic. There's like one dude who knows how to maintain it. Whatever." Which was not really true. But the funny thing is, to your point, when you started, like, everyone was like, "Oh, this stuff can't be done. This is why it's bad. This can't be done. This is why it's bad. This is why it's bad because it can't be done." All of a sudden, one day, I'm like going through some report menu, and I see something, and I'm like, "Well, how did this get generated? Because this is like really in the domain of what I wanted." I'm like, "How did this get done?" So you start probing with a really specific example, and people are like, "Oh yeah, you can do this. Oh, you can do that." Sure enough, we ended up creating entire workflows around reports and ways to pull data out of that system that nobody realized, to the point that after, when they moved on to like Oracle and SAP and these really elaborate things,
it was a pain point.
It was a pain point to recreate because it became super easy to do it there. And SAP was like, nah, like, you know what I mean?
You need a custom software to do that. So it was so funny. I snorted on that
one. So, I mean, always a little bit of something to, I agree with you. You got to check what you're doing and do things, always go back to the base levels. I think that's so important. So good. That was a good call out. But anyways, it's just, I don't think I've seen anything as, I don't want to say butchered because I don't think it's that bad, but anything that has been made as messy right now for e-com brands as COGS.
To that point, demand forecasting. John, before you jump into your conversation, talk about how a company does for demand forecasting and what it entails, just so we can kind of give greater context to that.
Well, I mean, so you're demand forecasting, right? So if I have a product and I'm selling, whatever amount by day, by week, by month, by year, I'm trying to understand what I'm going to sell of that product in the future, right? And that sounds super easy, obviously, if you're stable and stuff like that. But most businesses are growing all the time. They have products that become popular. They have products that sort of fade away and become irrelevant. And then there's always launching of new products, right? And you're always trying to understand, like, well, what's that going to, like, how much am I going to sell? And the reason why that's important is because it basically then touches on everything else that, Matt and I are always dealing with, right? Mm-hmm. From your logistics to your supply chain, like wherever it is, because what you want to sell, like, to meet that customer where they are at that point, means that it has to either be in the store, it has to be in that warehouse, it means it has to be available there. It was trucked, it was moved, it was sourced, it was, all of the things happened. Everything happened. Yeah, everything was produced, sourced, everything. So it's like, you have to get to that point to do it. And the reality is you're putting in all of that work and cash ahead of time, right?
Mhm.
Like how many times do you see a small brand, and one of the biggest challenges that I see, like I think we're both in that Slack community there for startups and stuff like that. And I think the most consistent thing that comes up as a general question is I need a co-manufacturer with low MOQs, which is like your minimum order quantity, because obviously you're putting out the money first. You're having to pay to get this product made, then you're going to pay to move it around, you're going to pay to store it, you're going to be paying to hold it while you're trying to sell it, you're going to be paying to ship it out. So it's like all the money from a brand perspective goes up first. So planning and your demand forecasting makes a big difference, because if you accidentally buy or just really eager and don't have a lot of logic, and you're like, I'm going to sell 100,000 of these things and nobody knows who I am. You might one day, but the likelihood is that you're not going to come onto the scene that hard, that strong, kind of, maybe doing it. And if you bought and have 100,000 and you sell 100, you're going to notice that strain on your cash.
Your SOL.
Yeah, like, you know what I mean? So trying to get to the right number is always a mix between like, what am I going to sell? What are my lead times? Like, how soon can I reorder it? How much can I produce that makes sense? Like, how much should I have that I'm going to hold? Because you also don't want to be holding like a year of inventory.
Yeah, so I think a great example of this, and probably everybody can relate to, was the Prime drink. I don't know if you've been following around with Prime. So Prime became very viral, I think, a year or two ago, where people were buying them for like $80, $90 for resale online because we're in scarcity in production, right? And people were going nuts. Now they have the other problem. Nobody's buying the Prime anymore because it was a viral product.
Yeah.
That was instant. It grew, blew up. They overproduced. They have a shit ton of inventory now, and they don't know what to do with it because nobody's buying the product anymore. The attractiveness of that product has disappeared. Right?
Exactly.
It's not as stable as it once was, or even as encompassing, as engrossing for the consumer. And that can happen to any big name, right? And same as resale, not even to food and beverage, but if you look at Nike's biggest moneymaker, I was just reading, was their resale of unique shoes, not their production line of like Michael Jordan's, from like their 1985 resale shoes that they've held on to. They can go and resell because their values, they produce that.
Yeah, because everyone wants something super unique. Yeah.
Exactly, right? So the uniqueness aspect of the scarcity of the product also helps create it, but you don't know what it's going to be until you've created it. And when you become viral, you're like, first reaction is to, let's make as many as possible because I'm going to sell as many as possible. But you don't know if that peak is already passed. And then you got to really do that to what we're going to get to talk about in the next 6 minutes.
Yeah.
Is demand forecasting. Sorry, John.
No, but I agree, and that's what makes it challenging, right? So you're always trying to look at like what you've been doing versus what you want to do in the future. You're going to think about how you're adjusting it and stuff like that. So I think it's important that people understand that, like, whether AI or not, anyone can tell you AI. The only you push your demand forecasting through AI. What are you going to see it do? You're going to see it put it through a Python script that's just going to use something like a standard model, and it's going to say, here's your forecast. Yeah, okay, but that's a mathematical forecast, and I'll give it even the benefit of the doubt. I'll say it's probably right. It's probably good based on those conditions, and then based on that type of math. It's your baseline. It doesn't necessarily mean that like then it understood, well, what are you going to do for promotions? Are your promotions really going to match? Is that seasonality? And I don't mean the weather. Is the seasonality going to be the same and stuff like that going forward? Are you introducing a new product that might cannibalize? Like it's actually very, very elaborate when you get into it. So specifically what I wanted to bring up, and this because it became a pain point when I've been doing some of the work with clients to help them out, that people don't do well enough, is your not helping yourself by not tracking your events. And what do I mean by that specifically? Is that you can have all of these elaborate tools, but I swear to God, a spreadsheet, whether it's Google or Excel or something like Airtable, will probably be one of the most impactful tools in your repertoire if, when you're selling your product or you're planning your product, you actually just highlight, hey, start date, end date, promotion. Hey, this date I went out of stock, or I went out of stock from A to B. so that you have all of this thing. Because I can guarantee you, the more SKUs you have, and the longer your business has been running, you don't remember your exact sales. You don't remember this. You don't remember that. And to hope that the baseline math is just going to be enough all the time is challenging. So I really think that people can do that, because there are great models out there like that will take in your history like that, but you have to give it to it. You have to have it.
And just to give it context, you have to give it that human touch, right? Like if you have just a SKU and you give it to a computer, the SKU is just a number, but you can have 17 different SKUs of toques, or beanies as they call them south of the border. And the computer just says there are 17 different SKUs and doesn't categorize them as beanies, and sales are off the charts, and it changes. But without that context of that grouping, that categorization, and that specific color and all those other things, you can see which trends are really affecting your sales better than others during different season. It could be as simple as, the Maple Leafs win the Stanley Cup this year. I know everybody's cheering now. And blue all of a sudden becomes the color of all toques coming out this winter that you didn't forecast for, right? These little moments of what John's talking about, these seasonalities and these viral moments that are for people that are fickle, you got to really look at the context, not only why it jumped, but what occurred during that time that it jumped as well. And you should know that as you're selling your product, because you're in tune with it, and just mark it down. As funny as it sounds, journaling your journey is very important to see why people are buying certain things along the way, versus, oh my God, I just sold 10,000 of these products. It must be hot right now. What occurred in the environment? Because you're not in a bubble. Something externally occurred that made that product hot in that moment.
Yeah, and the funny thing is, I actually think that it's probably an area where smaller brands have a wild advantage over big brands or big retailers, because you get to a certain size, like that level of detail on all kinds of stuff is next to impossible to track, which is why they a lot of these other models, like and the way that people approach demand forecasting don't incorporate that. But if I'm a small brand selling like 20 SKUs or less, like it's like your secret weapon that you could be much more dialed in with understanding exactly like what was going on with your history, your sales, what sort of like what peaked, what valleyed, and why, and put you way ahead than some of these bigger brands.
Yep, I agree.
So those were my two things today.
That's not a message, sorry. Anticipating possible events that may influence your sales.
Yeah, exactly, right. And understanding, what all of these things can do, because the thing is that you're never going to be perfect anyway. So it's like the concept of trying to have a perfect forecast is like a fallacy. It doesn't exist, because it's like you're trying to guess, by your intent months down the road in a world that's changing faster than ever before. But you can definitely be better. Like your goal shouldn't be to be perfect. It should be to be like really close, really good. Like, you're throwing at a target. You're trying to score the points. You're trying to get as close as you can, but you're not, it's not only a win if you actually get it perfect in the hole or whatever.
We're in the last month of the second quarter. Is that right? March, April, May, June. No, third quarter.
Third quarter.
We're approaching fourth quarter. So we should have some fourth quarter wisdom on our last month before fourth quarter starts. What should we be looking out for next month, John? What do you think? Besides prepping for back to school, all this stuff should be already in motion. Products that are hot for Halloween should have already been bought. Bottlenecks in your supply chain should have been already ironed out. If they're not at this point, it's going to be a bit of a challenge coming into fourth quarter.
Yeah, I think probably the most likely and useful information for anyone like now at this time of year would be, because what often ends up happening is that you have a lot of people that have been trying to either get into different retailers or make different partnerships or do something like this throughout the year, and then people sometimes finally say yes going into Q4 because everybody wants to ramp up your sales. So I would just say try to really understand, for example, what putting your product in that new retailer might do to your current baseline, what that new partnership might do, because the reality is you've all of a sudden introduced now like an unexpected event to what your planning was, which could either slow down your sales hopefully not. It could dramatically increase them. I think that's what a lot of people want, but a lot of people don't realize that, oh my God, I just got into Walmart. Oh, it's so great. Oh, they're selling out. I got to fill their orders. Oh, I got to fill it again. And then all of a sudden you realize that all your, smaller partners maybe will be out of stock. Maybe your website was out of stock all of a sudden. And like you create a very negative experience from what you had always hoped and planned would be like a very positive partnership with Walmart, let's say. So really try to be mindful of what these different channel demands can do to your overall customer experience as you might shift to try to take advantage of opportunities going into Q4.
And to that point, I want to just add a little bit of my own wisdom. Just because a big retailer, a big customer, a big something comes at you because they offer you the volume that you've been looking for, it's not always the best idea. Sometimes sticking to your niche small group where you have a thicker margin than you do with a large volume. Because when a volume retailer or customer comes to you, they're going to ask for a reduction in price. Your margin is going to get smaller. You might get more of it. You're also increasing your workload. You might have to increase your labor, so that margin might get even smaller because you're automatically going to think of current state, not future state. But with your current niche of customers that you have a good, strong margin with, I would always recommend never alienate those customers because those are the breadbasket that feeds the system. And growing with a big volume, if you're not ready for it, it's sometimes better to say no than it is to say yes.
Yeah, 100%. Super, super important for people to understand.
And on that note, we're at time, and we're respectful of people's time. And we'll see you guys next week. Right on time. We'll see you guys next week. Same channel, same time, same doc, same everything, same people. I don't know. We might throw in a guest or two in the next coming weeks. We haven't decided. If anybody's interested, more than happy to reach out to us. We'll include you on a morning conversation. On that note, goodbye, everybody.